Let's talk to Vinati Saraf Mutreja from Vinati Organics and find out a little bit more about their earnings performance as well as how they're likely to do going forward. Vinati, hi, morning. Good to have you on the show as always. Just going through your numbers, revenue as well as margin, both have seen a sharp downtick in the quarter. Now, we know Q3 is seasonable, but the revenue and profit have both dropped by 20%. You know, that's getting a little alarming. Your thoughts? Are you also overtly concerned about it?
First of all, good morning. Thanks for having me here. Now, you are right. Q3 has been an exceptional quarter for us, especially in terms of sales. Now, especially the months of November and October were low, mainly on account of our customers wanting to keep low inventory in December being year ending. Also, offtake of ATBS particularly was low, given that it's used in oil recovery and oil prices being down. But on the positive note, we do see a pickup in demand starting January onwards, and we expect Q4 to be much better than Q3. Net, we expect this year to end flattish, especially in terms of revenue compared to last year. Also, we expect good growth coming in Q1, especially once after a new line of ATBS is ready, and also the butyl phenols factory. Once those products are added, we expect about 15-20% revenue growth in FY21.
Right. You know, exactly on ATBS, what's the progress in the new capacities and other products coming on stream? Because, you know, there has been a delay. When do you think this is going to be coming into full effect?
See, quite honestly, the ATBS plant is almost ready in 1995. Now, we just haven't gone ahead with the complete commercialization simply because of lack of demand. We were projecting the demand to pick up and us requiring to run the new line starting October onwards. But now we see that the demand will pick up only starting March, April. So the ATBS plant will be ready in Feb. Coming to butyl phenols, now the butyl phenols is up and ready. We actually ran it for some time in October. Now, being a new plant, a completely new process for us, we realized that it requires certain modifications, and those modifications is which took up another 3 months. Now those modifications are ready and the plant has started in February. So you will see revenues from butyl phenols coming in this month.
Will the share of lower margin products also pick up, Vinati? I mean, do you see margins trending downwards? And if that be the case, are you then lowering your overall guidance as well?
See, guidance for this year remains the same. One can expect flattish revenue and EBITDA as compared to last year. Of course, PAT, there will be a growth of 15% or so, mainly on account of the better taxation. Now, talking about lower margin, yes, butyl phenols is a lower margin product compared especially to ATBS and our existing products. One has to realize that in butyl phenols, we will be competing with imported materials, especially product coming in from Singapore and Korea. Now, the reason for getting into butyl phenols is synergistic. We have the raw material for butyl phenols, isobutylene. Also, a big phenol domestic producer has come into play. So, net, if one looks at ROI, the butyl phenols ROI is still in the range of 15%. Now, of course, last year our EBITDA margins were on the higher side. I think they were about 40% compared to revenue. Going forward, I think 30 to 35% EBITDA margins are more sustainable given our industry and nature of business.
Any revenue concerns for IBB, Vinti, due to the China slowdown that you're seeing?
See, China, of course, is a market for us, for IBB. Now, our customers that are not in Hubei province are up and running simply because there is demand for ibuprofen being a basic painkiller. So, any sort of virus, if it's there in the region, the demand for such painkillers enhances. Also, the demand for IBB in the US has picked up. So, one will see revenues coming from US this quarter. Again, IBB demand in India remains stable. So net this year we will end the same for IBB, and next year one can expect 15% increased offtake.
Do you see ATBS realizations improving due to softening of acrylonitrile?
Well, raw material prices have come down because crude prices have come down, but we have a pass-through clause in our pricing. So even our end product prices come down. Now margins improving. Quite frankly, our margins were quite high in ATBS last year, especially on account of a shortage. Now with our new capacity coming in, that shortage is no longer going to be there. So in fact, one can expect margin corrections going forward.
Some believe that the multiple that the company gets is closely linked to high margin products, as a bulk of growth, from newer products is at a lower margin. So do you see any risk to valuation there?
See, our company is still in the business of niche specialty chemicals. Now, margins, when we are talking, are relative, right? When we are talking of butyl phenols margin, we are comparing it to our other products. But if we compare it to the industry, our margins will still be high because we will still be in this specialty segment where we will be the only manufacturer in the country where we are targeting a significant market share of over 50%. So I think I don't see any correction in the multiple as such.
All right, Vinati, thanks so much for joining us then with all the latest that you're seeing with regards to the current environment.